Bom dia, pessoal. Tudo bom com vocês? Bom, mais animação. Vamos lá, um sabadão gostoso desse. Bom dia. Aí sim, muito bom. Pessoal, primeiro, sejam super bem-vindos. Primeiro, eu estava rapidamente aqui para vocês, só para fazer uma abertura rápida, depois eu passar aqui para os nossos colegas do CFA Institute. Meu nome é Paulo Lacerda, hoje eu sou aqui um Associate Director na parte do RH, cuidando dos temas ligados, né, a treinamento e desenvolvimento para as equipes de tecnologia aqui no BTG Pactual, além também dos temas ligados aí às certificações do mercado financeiro e os programas de entrada do banco. Então também é um orgulho para a gente ter vocês aqui hoje com a gente. O BTG está sempre disposto e sempre aberto aqui aos nossos colegas e amigos do CFA Institute. Acho que o Everton comentou comigo numa briefing que a gente fez recentemente, acho que é o 5º ano, né, que a gente já recebe vocês aqui como nossos parceiros. Acho que ano passado a gente fez no Intel, que também faz parte hoje do grupo BTG. Então, de novo, é um orgulho para estar com vocês todos aqui. Sejam super bem-vindos. Espero que aproveitem a agenda de hoje e o dia de hoje. Que sejam todo mundo aí muito bem avaliados e façam uma banca tranquila, uma banca super boa, tá? Acho que de maneira geral, como abertura aqui, lembrando que o BTG, né, como o maior banco de investimento da América Latina, sempre gosta de incentivar que novos aí candidatos ou pessoas que estão chegando no mercado de trabalho, como muitos de vocês aqui que estão na faculdade hoje, que tenham, né, esse contato, acho que já com a organização, possam conhecer um pouco das nossas instalações, mas também um pouquinho do modelo de trabalho do BTG, e quem sabe mais para frente a gente não seja colega de trabalho aí, eu não vejo vocês aqui pelos corredores do banco, sejam aí nossos próximos bankers, pessoas que trabalham aí com asset ou em alguma área interna do banco, então quem sabe no futuro a gente não tem esse contato. Sei que tá todo mundo um pouquinho nervoso aí, tô vendo pela cara de vocês aí que vocês estão na expectativa já para poder fazer a apresentação. A gente vai ter uma breve abertura aqui com o pessoal do CFA Institute para poder, acho que, passar um pouquinho também de como vai ser a agenda, um pouco de como vai funcionar a organização do dia de hoje. Mas, novamente, então, queria deixar aqui, então, um recado rápido de sejam muito bem-vindos, que façam uma boa agenda e que eu vou acompanhar aqui também para depois dar os meus pitacos com o Everton lá para ver como é que foi a agenda. Então, eu queria convidar aqui a Faiga, que é hoje responsável ali também pelo CFA Institute, para que ela possa fazer uma breve abertura com vocês e também passar um pouquinho. Faiga, obrigadíssimo pela participação.
Obrigada aqui. Bom dia, pessoal, tudo bem? Começar parabenizando todo mundo que está aqui. Uma baita conquista já, tá, entre esse grupo de finalistas aqui. Para me apresentar, eu sou conselheira aqui na CFA Society no Brasil, junto com outros 8 colegas. Ao todo, nós somos 9 membros do conselho do CFA e temos 4 pessoas que nos ajudam muito ali no staff, no dia a dia. E para dar um pouquinho só de números, bem rápido aqui, aí já vou passar a bola aqui para o Gustavo, falar um pouquinho mais do Research Challenge. Mas hoje a gente tem no mundo mais de 190 mil profissionais certificados pelo CFA aqui, sendo que são mais de 160 societies espalhadas pelo mundo. Societies como a nossa, Nacional Brasil, societies regionais, aqui a gente tem cada vez mais a participação aqui do CFA no dia a dia. No Brasil, são mais de 3 mil candidatos por ano nas provas, nas certificações aqui, e a gente tem algo como 1.500 membros, um pouco mais de 1.500 membros do CFA Shareholder aqui no Brasil. Além disso, quando a gente olha uma certificação mais recente, já são mais de 200 profissionais certificados. Bom, para foco em universidade, além do Research Challenge, acho que eu queria destacar, especialmente para as mulheres que estão aqui, o UWIN, programa de estágio para mulheres aqui, que o CFA tem uma iniciativa muito bacana, feita aqui já indo para a 6ª edição, se não me engano. E aí eu queria só passar aqui e agradecer, especial a Moody's e a Colchester, que são patrocinadores aqui da Society, o BTG, por ceder o espaço para nos ajudar a estar aqui conosco, todos vocês, universidades, mentores aqui, por estarem apoiando esse evento, a 19ª edição aqui da Society, e as equipes participantes, sem dúvida, por estarem se dedicando e apoiando e se interessarem aqui pelo nosso dia a dia e pelo nosso projeto. Gustavo, acho que agora a ideia é passar aqui, não segurar mais, que acho que a agenda é super interessante.
Oi, gente, bom dia, como é que vocês estão? Prontos? Sim ou não? Sim ou não? Gente, bom dia, um prazer estar aqui com vocês. Primeiro eu quero agradecer que é o pessoal do BTG por estar cedendo aqui o espaço deles há 5, 6 anos. É um prazer estar aqui com vocês. Vocês devem me conhecer também de alguns anos, de alguns vídeos das finais passadas. Eu já estou organizando o Challenge já há alguns anos, vamos colocar dessa forma. E para mim o Challenge assim, é uma felicidade ver o que vocês fazem aqui. Quando a gente conversa com as empresas, com os judges, que são analistas de mercado, todo mundo fala assim, que o que vocês entregam aqui é algo fantástico, tá? É gigante. Falar um pouquinho do CFA, assim, esse talvez seja o primeiro contato do CFA com vocês. Para mim, o CFA foi algo muito importante, porque se vocês forem pensar, o CFA ele é uma entidade certificadora, né, porque a gente certifica vocês, falando, olha, vocês passaram no nível 1, 2 e 3, vocês têm o que o mercado exige. Então, você tem um componente simbólico muito grande, assim, você é um CFA Charter Holder no mundo inteiro. Então, se você tirou o CFA no Brasil, ele vale em Nova York, vale em Singapura, vale na Coreia do Sul. Tá? Então, uma certificação, um símbolo muito importante para vocês. O CFA também ele é muito importante em termos de conteúdo, porque as provas do CFA são provas que vão conectar vão trazer, né, o conteúdo de mercado para vocês. Vocês vão estar ganhando capital humano quando vocês fazem CFA. Enfim, isso que eu quero falar do CFA rapidamente, complementando a FAIGA. Um paralelo, uma metáfora que eu falo do CFA é o seguinte, assim como, aí eu vou puxar a sardinha pro pessoal da XP, eu lembro que eu vi um post da XP que foi muito legal, que fala o seguinte, o ápice de um jogador de futebol é ganhar a Copa do Mundo, o ápice de um cineasta é ganhar o Oscar, e o ápice de uma pessoa do mercado financeiro, um profissional do mercado financeiro é obter o CFA Charter. Então aproveitem, façam a prova do CFA depois do Challenge, que vai fazer a diferença para vocês. Voltando aqui para o Challenge, uma coisa que eu acho muito bacana, o nosso Challenge é um dos principais challenges do mundo. Tá? A gente já teve várias equipes que foram finalistas globais, entre as 5 melhores equipes do mundo. Várias equipes nossas foram finalistas de Américas, ou seja, entre as 5 melhores do continente americano. Então, só de vocês estarem aqui, vocês são vencedores. Assim, coloca no currículo, tira foto, publica no LinkedIn, no Instagram e onde for mais, que vocês estão aqui, que vocês são finalistas, que é motivo de muito orgulho. E a gente tem 6 finalistas esse ano e um vencedor. Tá? A ideia aqui é o seguinte, a gente vai divulgar terceiro, segundo e o primeiro colocado. O primeiro colocado vai para a etapa internacional, vai avançar. Preciso agradecer ao Joelson da Vibra e toda a equipe de RI deles, que deu um suporte gigante para a gente e para vocês, também como voluntários. Outros voluntários importantes são aqui os juízes que a gente tem aqui na banca. Vou começar pelo nosso decano, Fernando Fontoura. Ele foi 3 anos grader, já é o 8º ano dele como judge. Ele é sócio fundador e gestor de renda variável da Persevera. O Gustavo Oliveira atuou 8 anos como mentor, já está há 4 anos como judge, tem bastante experiência em sell side e agora ele está no buy side, atuando em Global Equities na Legacy Capital. Marcelo Pinheiro, ele é analista de Tech e Utilities do Itaú. A Daniela Eiger, ela é co-head de Equities Research da XP e analista de varejo. E por último, a Letícia, que eu não sei falar o sobrenome, é Associate Director da Moody's, cobrindo Financials. Tá? Assim, são todos CFA Charter Holders, agradeço demais ao tempo de vocês. Tá? E agora, gente, assim, falando aqui do Research Challenge, né? A dinâmica de hoje eu vou sortear aqui as equipes, a ordem das equipes, então vamos lá, 9h30. A primeira equipe vai começar mais ou menos 9h35, 9h40. Tá? Aí a primeira equipe vai ter 10 minutos para apresentar. Durante a apresentação, eu vou pedir para vocês o seguinte, coloquem o microfone perto da boca, porque se fica assim, vocês estão escutando? Não, a gravação não escuta. Então, quando vocês estiverem apresentando, microfone perto da boca, tá? Uma outra coisa, aqui na frente tem algumas telas de televisão, vocês não estão vendo, vai ter um timer aqui, tá? Vocês têm 10 minutos para apresentar, quando acabar o tempo, vocês têm que parar de falar imediatamente, tá? Aí em seguida vai ter o Q&A, são 10 minutos, também vai ter um timer aqui, quando acabarem esses 10 minutos, acaba a apresentação. Eu estou no meio da frase, você não pode terminar a frase, tá? Durante a apresentação de cada equipe, só a equipe, o professor e o mentor daquela equipe pode ficar aqui. Por exemplo, se eu sou da USP, se a USP está apresentando aqui, só a equipe da USP, mentor da USP e convidados da USP podem estar aqui. Se tiver alguém de outra equipe assistindo essa apresentação, essa outra equipe pode ser desclassificada. Tá? Então isso tem que ficar muito claro para vocês. Então falem com o microfone perto da boca, tá? A gente vai deixar 4 microfones para vocês, que eu acho que é mais que o suficiente para resolver a necessidade de vocês. E é isso. Vamos sortear a ordem. Então a gente vai, primeira equipe, o primeiro nome que sair aqui vai ser a primeira equipe a ser sorteada. Que a gente vai começar, digamos, 9h35. A segunda equipe a gente vai fazer mais ou menos meia hora depois. A terceira equipe mais meia hora depois, mais meia hora. Então conta entre 25 minutos e meia hora para cada equipe. Tá? E a gente vai usar, como sempre, uma modalidade muito tecnológica para fazer o sorteio. Foram milhares e milhares de reais que a gente gastou para fazer esse sorteio. Eu vou mostrar para vocês que o nome de todas as equipes está aqui. Se por acaso o nome da sua equipe não estiver aqui, este é o momento para avisar. Vamos lá, gente. UNICAMP. FEA USP. INSPER. GV, equipe 11. USP São Carlos. GV, equipe 8. Faltou alguma equipe? Então, a primeira equipe que eu tirar o nome vai ser a primeira equipe que vai apresentar. Tá? E depois vocês vão se organizando. Gustavo, eu fui a primeira equipe. Vocês estão liberados para ir ao shopping, para passear. Só peço que vocês estejam de volta aqui em torno de 12h30 para a gente fazer o anúncio das equipes, da equipe vencedora e dos seguintes. Vamos lá, primeira equipe, INSPER. Então, o INSPER vai apresentar agora. USP São Carlos, segunda equipe. UNICAMP, Barão Geraldo, terceira equipe. GV8 é a quarta equipe. FGV8. Quinta equipe, FEA USP. E a sexta equipe, GV11. Gente, ficou alguma dúvida? Vocês precisando de qualquer coisa, vocês procuram o nosso staff, o pessoal da organização que está usando o crachazinho cinza, tá? Até para saber como é que estão as apresentações, para calibrar. E, gente, essa não vai ser a melhor apresentação da vida de vocês, não vai ser a segunda melhor, nem a terceira melhor. Vocês vão se achar horríveis. Mas uma coisa eu posso falar, vocês são ótimos. Então, assim, fiquem tranquilos. Alguém vai errar, alguém vai gaguejar, bola pra frente. Tá? Bola pra frente, o que vocês já fizeram aqui é algo gigante. Assim, vocês receberam os feedbacks dos graders, do relatório de vocês. É fantástico, eu tenho certeza que a qualidade da apresentação de vocês aqui vai ser muito boa. Faça o melhor, divirta-se e aproveitem a experiência de vocês. Combinado, pessoal? Pessoal, muito boa sorte. Então, aqui só vai ficar a primeira equipe, que é o INSPER. Só a equipe do INSPER e mais os convidados do INSPER na sala. O restante, vão para as salinhas, aproveitem o coffee, enfim.
Good morning, everyone. We are Team 13 from INSPER, and we have a recommendation of buy on Vibra with a target price of 24.3 reais and an upside of 40%.
The fuel distribution divides into three states. We have sourcing, distribution, and final consumer. And the distributors, such as Vibra, operate bringing the fuels from the sourcing to the final consumer. Brazil have around 140 million cubic meters consumed yearly, making one of the largest markets in the world. And those consumptions follow GDP trends alongside the years. We have three major companies in the sector. Vibra, Ipiranga, and Raízen making 60% of share. We have two types of players in this sector. We have branded and white labeled. Branded, they have association between the distribution and the fuel station, allowing them to charge higher prices, as we can see in this study, that even with higher volumes sold, the branded have higher prices in all the states in Brazil. And the white label, they don't have any association between the fuel station and the distributor, what makes them more sourcing flexible, and sometimes cost advantage. Vibra was founded in 1971 and became public in 2017, and it became a private company in 2021. Vibra has two operations, retail and B2B. In retail, we have gasoline, diesel, and ethanol, and business to business comes from aviation, economic sectors such as agriculture, and other ones. Through the last years, the companies in the sector, they had some struggle, but Vibra is today the operational benchmarking of the sector, as we can see with the rising of the EBITDA alongside the years. Taking our history on the sector, between 2012 and 2014, it was the golden years. Brazil had economic boom, and those companies had strong results. Between 2015 and 2020, the sector faces some challenges. The companies as well had some lower results. And then in 2021 onwards, Vibra got the operational efficiency and outpaced the players.
Going on to our three theses, we have logistical advantage, the best positioning in the market to take advantage of a betterment in the competitive scenario, and B2B expansion to agribusiness and lubricants. This is our first thesis. Here we can see clearly that Vibra has a logistical advantage in terms of storage capacity in the industry. This advantage shows itself more in the north, northeast, and midwest regions, where it operates basically alone without Ipiranga and Raizing, leading to softer competitive scenarios, allowing them to leverage said advantage. We also highlight Vibra's economies of scale, as the majority of its costs are fixed, and it is the highest player in terms of volume sold, so it's able to dilute its fixed costs, and 87% of players don't reach the same threshold which Vibra reaches, which is 200,000 cubic meters, which is considered the minimum for viable cost dilution. Here we conducted a study to prove our last point on logistical is basically the freight cost advantage that it has because of its primary basis. Freight transportations from primary basis are based on pipelines instead of trucks, which is cheaper, and we can see that in the fuel price being cheaper closer near primary basis. We also believe this is a competitive advantage, as today it's not viable to construct a primary base with capex of 350 million, yielding an 8.2% IRR, while Vibra only did these projects because it was a state-owned enterprise and it didn't necessarily put returns at first.
Moving on to our second thesis, we believe that Vibra is the best position to lead in a fair fuel market. Illegality has plagued the sector for decades, damaging margins and market shares for illegal players since we've analyzed the sector. Most recently, what has happened is the illegal operators have exploited from multi-phase taxation and therefore have gained market share and margins. Also, another form of illegal operation in the sector is the CBIO non-compliance. We estimate that players that do not comply with CBIO obligations, they gain market share, whilst the major three players have lost market share in the same period. There is a direct correlation between. What we see in the sector nowadays is an increased effort to decrease these illegalities, mainly showed by the closure of Copapi, one of the biggest illegal distributors in the sector, and we've seen a bump in margins up when it was shut down. Also, we highlight ICL, the institute formed by the major three companies to combat all types of illegality in the sector, led by Emerson Capaz. And besides that, we've seen a driver in the sector due to the government needs for revenues coming from taxes, and there is a 30 billion reais evasion in the sector. We believe Vibra is best positioned because it is positioned in the states that have higher GDP growth potential, such as Northeast and North of Brazil, as well as these are the states with more illegality penetration. We estimate the earnings gains for Vibra at 366 million reais, in the short term, and this could impact the target price in 3 reais if we apply a multiple of 9 times, which is what is applied nowadays to the company. Also, we conducted an analysis that with the illegality improving, we could reach a multiple of 12 times, which is the historical multiple of the company, and therefore reaching a total benefit of 5 billion in EBITDA.
Going through our third thesis, I would like to talk about the B2B expansion through agribusiness solutions and lubricants. On its investor day, Vibra pointed 5 pathways to grow, and we would like to highlight the increase in B2B offerings and the boost in lubricants. About the B2B, they want to increase the cross-sell from B2B diesel and lubricants from 36% to 6%, and also explore new agribusiness solutions. About lubricants, Lubrax is a pretty well-known brand in Brazil. They are the 6th largest franchise in Brazil, and they have the largest lubricants sector in Latin America. Well, talking about the agribusiness, the diesel consumption is pretty well aligned with the grain harvest, and we expect a 2 to 3% annually growth on it. And well, as Julian Pratt said, out of the 160 billion revenue from Vibra, almost 20% comes from agribusiness solutions. And Vibra has spotted 6 key agribusiness states that they can have an increase of diesel market share, and to reach a Brazilian one, which would give Vibra something like 104 million in EBITDA. Talking about lubricants, even though its revenue doesn't seem as big as Vibra, they have a really good margin. If we compare with Move, Move has 25% gross margin, which is 5 times the margin of Vibra. And so, in this context, Vibra could reach an EBITDA of 400 million, and this, applying the 8 times EBITDA of Move, we would have 3.2 billion of value added, which would represent 16% of Vibra market cap. Now, going through ESG, first I'd like to talk about the governance. We have a decentralized structure, which the executives are directed to specific areas. And they have a really good track record working in companies within the sector, just like Ipiranga and Raízen. Well, the management is pretty well aligned with shareholder value. They have 2 main metrics for their variable compensation, which is ROIC and TSR. And additionally, we conducted a word frequency analysis, which shows that margins, people, and customers are the main priorities in Vibra on their earnings call, showing that they put always the stakeholders at first place. Talk about green solutions. Even though oil and gas doesn't seem as a really good eco-friendly one, we see that Vibra has done pretty good efforts on decarbonization, and they are trying to become a multi-energy platform since the Comerc acquisition that has centralized and distributed generation through solar and wind alternatives. Lastly, I would like to talk about the social one. The safety at first place, the fatality and accident index has dropped quite a lot, and they have embraced the fight against child abuse.
Going on to our projections, we projected volume for the market as a whole, and we projected also gains in market share. For Vibra's revenue, we also utilize the spread between what it purchased the fuel and how much it sells, which is 0.234 cents per liter for retail and 0.26 for B2B, and therefore we also reached the margins showed at the top. Vibra is also not a very capital-intensive business, except for the 4 billion acquisition of Comerc, and we can see later the capex stays around 600 to 700 million yearly. Also, it doesn't have difference in working capital, so we generate robust free cash flow margins. Here's our equity value with only 36% of value in the perpetuity, also including Comerc and tax credits. We also conducted IRR analysis, which yielded 25.4%, which is above our cost of equity. Here's also our thesis translated into...
Hello? Hi. So I have 2 quick questions. The first one is that you mentioned that one of the maybe growth drivers of the company is that they are exposed to North and Northeast, where they have the biggest growth potential, but also there's where like the macro condition is tougher, and we are actually entering in a deterioration cycle in terms of the economy. So how do you see that impacting the thesis and the company, especially in the coming quarters? And the second one is regarding the loops section. You mentioned the 5 times higher gross margin for Move. Why is that there's gap, and why would it close? I think that's the 2 key ones.
Okay, so addressing the first question about the Northeastern region, we have conducted some studies that showed that the Northeastern region has the most potential growth for GDP, and therefore there will be more disposable income. And with the illegality being combated in the sector, we believe that people will shift their consumption to branded fuels as they are more reliable.
It's just that the issue in the region is that they don't have money. And we are not entering in a positive economic cycle. So that's kind of could they do to kind of curb that?
First of all, with the illegality being combated in the sector, we will already see an increase in margins independently of the economic scenario, because the illegal operators won't be able to charge the prices they are charging nowadays. That's our main thesis. And besides that, we believe that the Northeastern region has the fastest GDP potential growth. Not that it is the richest region in Brazil, not that, but it has and this will allow more disposable income for the people, and therefore, even though the credit scenario is deteriorating, macro in general is bad, this is one of our risks that we weren't able to present.
And also we believe that fuel consumption is something essential. So it's one of the last things people cut off when they need eventually to budget out things at home.
And it's a natural movement for the more underdeveloped parts of the country to grow in a faster pace than the more developed parts of the country. That's why we put as a potential to grow for Vibra.
I have a question on...
Can you repeat the second one, please?
You mentioned that the Movie has 5 times higher gross margins than Vibra. Why is that there is this gap between the two companies, and why would it close?
So, well, the lubricants, it's a much less competitive sector. It's not pretty competitive as the normal fuel distribution one. And we think that looking for prospectus from Move, they have a 25% gross margin, which they operate mainly in US as well, and Vibra here in Brazil, they seem to have a better margin, even in lubricants. So I think that the 25% gross margin in lubricants specifically should be okay for Vibra to get to it.
Basically, what we're comparing here is not necessarily Vibra's margin to Move's margin, but what we're trying to prove is today Vibra's margin without the penetration of lubricants is 5%. We believe it can reach upwards to 25%, perhaps even more, due to the of this nature of business, not the as a whole, because Move operates in other countries too, where it doesn't necessarily have the brand name that has here in Brazil and Latin America, like United States. So the margin is actually lower in these countries. And while Vibra Lubes is only focused here on Latin America, we believe that it can even surpass the 25% margin.
You assume that the volumes for the company are going to grow over the next few years, but how do you consider the potential impact of electric vehicles or more efficient source of fuel in your projections? And also, if you could put that into context of what they want to do with Comerc and how Comerc would impact their business. I think they're thinking that there could be a risk there, but would volumes grow up or down?
First of all, Brazil's energetic matrix is one of the cleanest in the world. So we don't map it as a huge risk in our thesis, mainly due to this. Our energy comes from clean sources in general. This is the first point. And so we model our volumes growth via GDP growth, which the sector has always followed along the years. And this is the point. About Comerc.
About Comerc, we don't believe it was necessarily a good capital allocation decision. In our model, we don't attribute much of our upside due to Comerc, mainly 500 million in terms of equity value because it has loads of debt. So it can be a future where it can expand into those areas, but I think the core business will still be the fuel distribution business as it's a tried and tested business.
I'm not sure if I'm wrong, but you forecast flat margins and flat cash flow generation. What needs to happen for the stock to go up, I don't know, 30-40% and reach your target price?
We don't model margins flat. Like we forecast a gain of around 40 reais per meter cubed in EBITDA margins. This is one of our main points. And with the illegality improvement in the sector, we believe we showed the earnings gains, potential earnings gains that the companies have, and this will, besides these earnings gains, we believe there will be a multiple re-rating in the sector, going back to at least to historical multiples, which they are much below today.
And if I may add on margins, our decision for margins is first of all to get to nearly as close as the reposition margin, which is basically margin if excluding effects like Brent price rising or other stock effects, inventory effects. So we tried most to reach that margin and eventually put it up a notch due to our beliefs in the improvement in the competitive scenario.
You support your thesis based on 3 pillars, right? So logistics, taxes, and B2B. Regarding taxes, is this a pillar where the company has something to do here? Is there something that the company can actually execute to improve the scenario of competition and unfair competition? Or is this just a pillar that the company is exposed to, but it's out of the company's control?
The company is exposed to that, but we believe that is the best position to gain advantages through those changes. And as well, the company is actively doing some activities in the Instituto Legal that is improving the sector competitive dynamics as well.
Well, one pretty good example was the Maranhão diesel import that was tried to be facilitated by its government, but in one day the sector mobilized and they didn't get to happen to get 1 liter of adulterated diesel in the state of Maranhão. We see that at the moment we have the perfect storm because the media they are talking about this issue. The government they have an issue that need to be covered, and they have over than 30 billion tax evasion. And the companies they have aligned themselves. They put the rivalry beside and they put themselves together with the ECL to put an end on illegal competitiveness.
Yeah, so we believe the main driver in this part is the government. They need to address the fiscal deficit, and they have shifted their focus into fuel distribution along the past months.
But based on this assumption, do you think that Vibra is going to have an advantage over Raízen and Ultra?
Well, yes, we believe so. First of all, because they have bigger volumes, so they'll have bigger earnings from the bigger volumes that they boast. And second of all, they have better margins. So this volume is along the years they have had better margins since recently, and so they will benefit more from this scenario. We believe.
Vibra is also the most efficient player, and as we highlighted in our first thesis, it's basically positioned in the states where adulteration happens the most in comparison to Ipiranga and Raízen. So it's a marginal effect of combating illegality will impact more Vibra than it will Raízen and Ipiranga.
Well, just like I just said, here we have the 10 states with the most illegality, and out of these 10, Vibra has the most storage capacity in 6 of them. So with the improvement of the scenario, we truly believe that Vibra is going to be the one that's going to be the best one on this legal market.
Good morning, we are Team 9 and we're about to start our investment thesis on Vibra Energia, the major
fuel distributor in Brazilian markets. As a consolidated giant, we see that the market is mispricing the company's shares, so we have formulated a buy recommendation on an upside of 79%. This recommendation was based on four main pillars: a superior footprint, ahead in informality fight, ESG catalysts, and high dividends. In a highly price-sensitive sector, Vibra stands out as a leading fuel distributor and covers a diverse range of products. And what makes it even more impressive is Vibra's ability to maintain its leadership while achieving superior performance in ESG. In a market that has grown close to GDP, infrastructure and regulation modes haven't been named enough to maintain the biggest player's market share, given the last year's margin over volume strategies and the entry of Russian diesel. However, we have enough reason to believe that this trend will not continue to Vibra.
And the first of these reasons is its unique footprint that allows it to thrive in a margin-constrained landscape. The company has logistical costs 10% lower than the industry average, operating closer to its gas stations, with a smaller average radius and fewer gas stations per base, as compared by our Python analysis. Adding to this advantage, the company has a strong tankage capacity without requiring significant investments in the near term. Vibra's presence across all Brazilian states positions it in a more challenging and diverse scenario than its main competitors. Despite that, the company has a strong competitive inventory turnover. Additionally, its post-privatization operational efficiency has driven a steady margin growth, outperforming peers with a 23% per annum average of Ipiranga. Talking about its B2B clients, it's impossible to ignore agribusiness, a sector of significant growth compared to Brazil's GDP, and the company is strategically positioned in this market, deriving 15% of its revenue and 20% of its diesel volume. And moreover, we expect the companies to reach 30% market share in this segment, leveraging a dual strategy: tailored products and leadership in key regions. Another key B2B pillar is aviation, where Vibra holds a dominant position. The company operates in 94 airports across Brazil, fueling 6 out of every 10 domestic flights. Jet fuel ranks Vibra as third most sold product, and we project its growing share in the company product mix, driven by a recovery consumption post-pandemic, maintaining a strong share in this segment. Going to our second investment pillar, we believe that Vibra is better positioned to capitalize in the informality fight. Informal practice in Brazil fuel segment have deep historical roots, driven by a high tax burden in a supply-sensitive market, creating incentives for regular activities. This practice caused an estimated 16 billion reais in operational losses last year, harming formal players and posing serious risks to society. And these losses also impact state revenues. Under pressure to balance public accounts, we expect the government to coordinate efforts to close their gap of 14 billion reais in state revenues, driving a historical sector demand, increasing flows by inspections, and especially 5 key legal catalysts. These catalysts target informal activities that affects approximately 27 million cubic meters of fuel annually, benefiting formal players through volume and repricing recovery. However, we see Vibra better positioned to capitalize on these changes with higher EBITDA gains due to its higher market share and margins, translating it to a 24% upside to our basic case.
Going through our third investment pillar, we see Comerc integration as a new opportunity for growth and stability to EBITDA. This acquisition adds strategic assets in solar and wind energy generation and position Vibra to capture the rising demand for renewable energy in Brazil. The strategic location of Comerc asset generation provides greater stability and predictability, supporting an energy trading vertical. We estimate for this segment a stable EBITDA margin of 72%. In energy trading, Comerc centered its operation in the southeast, the region leading growth in open energy market. In 2024 alone, over 8,000 companies migrated to the open market in São Paulo and Minas Gerais. The company is well positioned to benefit from this momentum as the largest player in the country, holding 8.2% share of consumer units and sourcing 78% of its revenue from this activity. Although Comerc's revenue is relatively small when compared to Vibra's, its higher margins increases Vibra's consolidated EBITDA margin by 60 basis points by 2025. This means Comerc will participate with over 20% of total EBITDA. Finally, we see Comerc's acquisition as aligned with Vibra's ESG principles. We estimate Comerc generation avoids over 1.7 million tons of CO2 emissions, 28 times Vibra's scopes 1 and 2. In addition to the environmental impact, this could generate a carbon credit revenue of 17 to 34 million US dollars. But how can Vibra demonstrate to the market its operational efficiency and ability to integrate the M&A?
Dividends are the answer. The company has demonstrated a great operational efficiency, with a free cash flow cash conversion average of 42% against 34% in this period, which leads to a high cash generation in the next few years. And this is supported by tax acts from complementary laws 192 and 194, which we believe that Vibra will be able to use 5.7 billion in the next few years, which will support its leverage by less than 2 times in 2026. This will support the payment policy of the company, with higher margins, higher revenue, and the company payout of at least 40% will lead to a dividend yield of 9.6% in 2025. Now going deep into ESG, the ESG is a key pillar for the sector, but the company is going at it because it's scoring 7.5 in environmental, 6.5 in social, and 6.6 in governance. Vibra's emissions are in line with the sector, and the company has set ambitious targets to neutralize Scope 1 and 2 in 2025 and Scope 3 in 2050, which supports its multi-energy platform and with some key actions like Comerc's acquisition. Vibra also cares about social, combats child sex exploitation on Brazilian roads, and cares about diversity too, with 20% people black in leadership and 30% women in 2030, which supports a high labor satisfaction index as Glassdoor analysis show us. But this is supported by strong governance, by linking variable compensation, ROIC, and the EBITDA margin, aligned with shareholders' interests, and the listing of Mercado Index shows that Vibra has a high governance standard, supporting its ESG positioning.
And how is your investment thesis aligned with your financial projections and valuation? So we project a 2.3% CAGR in top line in the next 5 years, supported by a 1.8% volume growth, driven primarily by the volume recovery through efforts to combat informality, regain share in agri-sector, and a rebound in aviation, while Vibra maintains its strategy of margins over volume. And because of that, we expect a gradual recovery of margins in the next 5 years, with a gross margin reaching 6.2% in 2029 and EBITDA margin 4.2%. This is driven primarily by the pricing recovery from a more formal market and the company's strong positioning and footprint mode. As a result, the company should generate strong cash flows in the next years, further reinforced by the tax assets. And to consolidate all of this, we approach the company valuation with a sum of the parts methodology with 70% weight and relative valuation, reaching a 79% upside for Vibra shares. In your vision, Vibra is a unique opportunity to invest in a high-quality asset at a discounted valuation. And we see the market is missing the company's cash generation capacity, as you can see in your intrinsic valuation. Furthermore, the company appears to be discounted versus global peers.
With regards to risks, Vibra shares are affected by the volatility in FX and Brent. But although these factors may delay the correct pricing of the market, they do not change the company's fundamentals. In addition, the company still operates in the oil and gas sector, and which is a sector that is constantly being updated with environmental laws. But as mentioned above, Vibra has excelled dealing with this. Vibra has came out as an inefficient player and understood what is needed to dominate this segment. For this reason, we reiterate our buy recommendation with a large margin of safety and a clear belief in competitive advantages of Vibra. Thank you. We are now open to questions.
Thank you for the presentation. Could you discuss what was the rationale for Comerc's acquisition? Why did the company choose to acquire another company in such an unrelated activity, and how does it fit with the whole strategy?
Sure, I can start addressing your question. So Vibra started a position in Comerc in mid-2021 with a strategy of creating a multi-energy platform. So even being a utilities energy company, it's related to Vibra's main purpose of being an end-to-end solution to its client and a multi-energy diversified platform. And that's the initial thesis of Vibras regarding Comerc, and they made the acquisition of the other 50% because they had stock option, but to bring forward the synergies, to bring forward this strategy that creates another growth avenues that the fuel sector may not have.
Still on Comerc, what is Comerc's competitive advantage?
Sure. Well, Comerc is the biggest trading company. It started as a trading company, right, in the energy market. But in the last 10, 15 years, it developed generation assets. In the last 2 years, most of the capex was in the last 2 years. So Comerc has a trading segment that is supported by strong generation assets. So Comerc can choose if he buys energies from another players, he uses his own energy, and Comerc is near to its clients. So we see this as a big competitive advantage.
Additionally, Comerc's location assets is in high solar radiation zones, as we can see in the radiation map. Go to the presentation, please. The location of the Comerc's assets is coincidentally with the radiation zones of Brazil, and beside that, it positions itself near to strong markets in the southeast.
Hi, excuse me. I have a question on slide 13 on the tackling of the illegal practices in the market. Do you think any of those are more likely to be implemented, and are there some of those that you think are more difficult to be implemented?
Sure. Can you go to the interview slide, please? No. So we mapped here the key legal catalysts that addresses the 5 main irregular practice that we mapped, and the one that are already stable is the BOD's model compliance model that's already working and that is already tracking this volume to the formal players. But the most hard to happen yet is the ethanol tax enforcement that rely seriously on the tax reform with simplifying tax on ethanol. So we think this is more difficult to happen, but with tax reform going through in this year, we think that's going to address this volume that's evaded from these irregular practices.
And assuming all of those are implemented, do you think it's likely that the company will reap the benefits of all of those, or do you think it makes sense to incorporate just some of those? For example, to the fiscalization of naphtha, sodas, gasoline, I think it's more difficult than to tackle something at the general tax level of the country.
Yes, and to answer this question, we address these EBITDA gains through 5 years in our model. So we divided these EBITDA gains through 1/5 of it, and incorporating in the 25-year part now. Though we expect this EBITDA is going to incorporate in 5 years. So just to address this question, we're not too optimistic that think that the Vibra is going to incorporate this EBITDA just in 1 year. So we divide that in 5 years. We split this EBITDA in 5 years. Then we think that it's going to incorporate volume and this margin resulting in this informality addresses.
I was looking at your projections, and I have a question regarding the margin expansion. Firstly, why does the margin fall on 2025? And what drives it to improve in the coming years, since like you actually have a slow price growth, mostly on volume, which has some variable expenses associated to that. So just wanted to understand and explore the margin dynamics ahead.
Sure, I can start addressing your question. So in the next year, starting by that, we see the gross profit growing in BRL per cubic meter in line with inflation, but we see a higher SG&A, mainly because of higher expenses. We see the trend this year, and it can be still a difficult year for the company in this regard. But in the medium to long term, we see that the margins should grow in line with inflation in cubic meters, and we see that because, of course, this company is strong competitive moat, right? But because they had higher margins in the past, and we see that they can try to achieve and try to recover some of these margins. We think that's very possible.
Could you just illustrate which are maybe the 2 or 3 key growth drivers for the margin to go back to where it was?
Oh, sure. The key drivers are the pricing recovery from combating informality. So a portion of our thesis involves margin gains. And the other part is that Vibra aims a strategy of margins over volume. So we made a mix between the company closing gas stations that are performing bad or implied contracts that are not performing very well. And these activities can expand the margin and reflects our volume growth too.
You forecast roughly 80% upside, and when I look your estimates against consensus, you're below consensus. How would you explain that? How come a consensus is more bullish than you are, and still there's a huge upside?
Sure. We think consensus is not incorporating the tax assets of the company in their projections. So as we incorporate that, our projections leads to a higher cash flow until 2029, and we think that drives most of the valuation difference. But on the other side, consensus has aggressive upside too, so we are not as far of them when we compare in our football field here.
So what is missing for the stock to go up 80% or so?
I can start addressing this question. We see 4 pillars for the stock to start growing up. The first one is the integration of Comerc. The true integration of Comerc is a recent, the last 50% acquisition is something recent last year. So we still think we have space to be more integrated, the both companies. The second one is the leveraging. So the company has issued high debt to concretize this acquisition, and this is something that the market is looking a lot. So we need to see the company deleveraging itself. The third one is I'm sorry for the first one. The first one was the change in the country's currency flow. So as I said, Vibra's shares is highly affected by the volatility in FX. So we see that these points is the international view on Brazilian markets. It's something important to see that Vibra will achieve our target price earlier. And the last one is cash generation and dividends is something important to our as well, and it's something that we believe a lot because Vibra has a high cash generation and cash conversion metrics.
Regarding slide 30, you projected 1.8, I guess, increase in volume. And the main drivers, as you said, was aviation, agribusiness, and informality. How it will affect a gas station because the street drivers I can only see Informality, and so I would like to understand the main.
Vibra, the leading food distributor in Brazil, has been overpunished by the market despite being well positioned to face future challenges. Hello everyone, we are Team 15 from GMF UNICAMP, and today we are initiating our coverage of Vibra Energia with a buy recommendation, a target price of R$24 per share, representing a 36% upside from the last closing. Buying fuel from the refineries, mixing it, and selling to their clients, the company operates 98 units nationwide and relies on Petrobras as its main supplier, ensuring a strong market position. The company also has a great network in both retail and B2B, with more than 8,000 gas stations and serving more than 9,000 corporate clients. Nicholas, can you tell us what drives the industry?
Fuel sales are closely tied to our economy, with flex-fuel cars using gasoline or ethanol and trucks using diesel, showing strong correlation of 88%. Our recommendation is based on 3 investment pillars. First, a better capture for Vibra as a more exposed player, maintaining our margins in baseline levels. Second, a healthier competitive environment with the resolution of irregularities, improving our margins levels. Third, a strong long-term position with Comerc. So, João, let's dive into our first pillar. Vibra's capitalizing on favorable structural tailwinds.
At the start of the century, the Brazilian market was dominated by international oil companies. However, 3 motives drove these companies out. First, the dumping practiced by the state-owned distribuidora. Second, the monopoly for as Petrobras solo supplier. And third, irregularities and tax complexity. The sector facing declining margins. However, the privatization of distribuidora and the end of the dumping initiating a healthier competition with the more robust margins. This transformation was driven by a variable remuneration for executives based on profitability metrics. At the same time, Petrobras started a pricing policy close to the international parity, and more recently, a more stable pricing approach, allowing companies to achieve better levels of working capital, with the Vibra being the first to surpass the 2019 levels. Independent importers lost market share as the market shifted toward distributors, driven by relaxed import restrictions, this allowing companies to explore new opportunities in this channel. Additionally, a single free tax regime for diesel and gasoline decreased irregularities and increased the sector's margins. So, the privatization of distribuidora, the Petrobras pricing policy, the relaxed tax restriction, and changing tax regulation lead the sector to structural tailwinds. However, how does Vibra benefit more from these structural tailwinds? Vibra has a more distributed network. Think of that, we conduct analysis in Python for all Brazilian cities, show that Vibra leads in number of the cities with 100% market share, has a higher average market share for 200 most concentrated cities, and operates in economically better cities. As a market leader with the greatest push to fuel distribution, Vibra has a higher EBITDA margin than its peers, capitalizing more from these structural changes. Moving to your second pillar, Vitória, why do you foresee a better competitive environment ahead?
The fuel sector in Brazil faces challenges due to irregularities. This includes tax evasion and fraudulent imports, causes an annual loss of 14 billion reais. Additionally, 15% of distributors evading CBIL payments causes an annual loss of 715 million reais. Fuel deterioration further contributes to an annual loss of 15 billion reais, totalizing annual losses of 30 billion reais. So the government and sector entities are taking key steps to address these irregularities and create a better competitive environment. But how the majors benefits from this? So we calculated a margin increment of each irregularity based on a partial resolution of each one. So we have tax related with 20% of resolution, renovable with 80% resolution, and regular mixing with 10% resolution. And we see that Vibra captures 28 reais per cubic meter by 2027. So the short term for us is pretty clear, but what about the long term future?
There's a global trend for electrification. According to the International Energy Agency, nearly 50% of car sales are expected to be electric by 2035. and Brazil has shown sales increase in recent years, with a CAGR of 88% compared to 27% that we projected. However, we expect electric vehicles to account for only 4% of total fleet. And why this lower growth? Well, there are three main reasons: electric vehicles, high prices, the lack of infrastructure, and internal strength. Brazil has a unique dynamic, with ethanol vehicles being greener than electric ones, emitting 29% less carbon. So, in the short term, we see the resolution of irregularities and a strong motorcycle demand. For the long run, we see a scenario with uncertainties. The Comerc stays Parte that's yet to ignite. The renewable energy company was acquired for 3.7 billion reais, and despite this high cost, with an IRR of 16%, it makes the acquisition viable, positioning Vibra for the future, supported by two investment pillars. First, Comerc adds value even if the electrification accelerates. Second, Comerc offers a diversified portfolio for B2B clients. And third, there is financial synergy between the two companies. This acquisition positions Vibra for a reliable future, allowing the company to adapt while maintaining a strong footage operationally and financially. Comerc is just one piece of Vibra's multi-energy future. But Victoria, can Vibra stand out from its competitors?
We made an ESG scoreboard confirms Vibra's strong ESG position, outperforming its competitors. So Vibra is looking to a greener path with its three key projects: Zeg Biogas producing biomethane, Evolua, an ethanol distributor, and EasyVolt focused on electric mobility. With these ventures, along with Comerc, Vibra is moving towards to becoming a multi-energy company. On the governance side, we have the CEO Ernesto Pousada with a well-suited vision to Vibra's strategy and the compensation structure well aligned to the shareholder interests. So, Fernando, given all these catalysts, how does our analysis translate into numbers?
For this, we used an intrinsic valuation approach by a 5-year projected DCF via free cash flow to firm, reaching a R$24 target price. Then, we also conducted a Monte Carlo simulation that ensures our good perspective. Recent disclosures involving Brazil's fiscal policy have increased market pessimism, harming Vibra shares by almost 20%. However, looking at the company's next 12 months of EBITDA, we see the most significant discount since the privatization, with a surrounding 31% discount to historical average, enhancing our investment recommendation. We expect an important EBITDA increase in the next years, driven by the higher baseline margin and the improvements from irregularities, reaching a R$200 per cubic meter margin by 2027. For the company's market share, we maintain a conservative approach by flattening the B2B projections and increasing the retail until 2027. Our investment pillars are all incorporated in the company's forecast, including the baseline margin and the increments from irregularities contributing 16% to our upside, and the Comerc's DCF contributing 20%, totalizing our final 36% upside. By our scenario analysis, we see a great positive asymmetry for the company in the next years, since the market is not correctly pricing the company's current profitability. As we can see by our reverse calculations, the market is pricing a shameful R$160 per cubic meter margin, and recognizing the irregular solving tendency and the higher margin levels of Vibra related to the industry, enhancing our investment recommendation. Finally, what are the risks behind Vibra's business and our investment pillars?
As shown in our risk matrix, if the macroeconomic scenarios get worse, affecting volume and Vibra capital will reflect in a 30% decrease in our target price. Moreover, we are glad to set the game rules, and if it doesn't go as I expect, might significantly harm our target price in 46%. In a better, good market cycle, Vibra is a jack of all trades, showing a great strategy and position to the future tendencies. Your entire buy recommendation for Vibra based on three main pillars. First, the capitalized structural tailwinds.
Second, a better competitive environment.
Third, a resilient long-term position.
Thank you, and we open to questions.
Can I start? My question is regarding the risk that you mentioned regarding the macro dynamics. I'm actually a little bit pessimist with what we should expect going forward, and it caught my attention that it basically raises your upside. So just wanted to understand what is your base case in terms of economic trends, and what does that reflect in terms of deterioration going forward? And how do you see that impacting your view on the name?
So, to go to the appendices.
So, okay, thanks for your question. So, moving to our risk matrix to see it better, our base scenario is considering already the current macroeconomic scenario for in several assumptions of kind of the cost of equity, also the cost of debt of the company, and we projected in our risk matrix an even bad macroeconomic scenario, with the macroeconomic getting worse by the FX rate going even more up, the grain prices going even more up, and also the sector volume growth doesn't go in as expected.
I'm sorry, but what is expected in terms of volume growth in your base case scenario for 2025, or maybe the CAGR for coming years? And what is reflected on this macro deterioration, just for us to get a sense?
Sure. Let's go to our scenario analysis. So basically, in 2025, we expect in a bear scenario, in an even bad scenario, the sector volume going -1%, and that's in line with the company's expectation, the expectation of the economy in a bad macroeconomic scenario. And we see also that by the net revenue per cubic meter that we projected, that is using the FX rate and Brent prices. So basically, we see this even bad in the macroeconomic scenario for a bear case.
You mentioned financial synergies between Vibra and Comerc. What do you mean by that?
Okay, sure. Let's go to our appendix that we actually projected the potential operational synergies of Vibra with Comerc. So let's get there. But basically, we see there are two possibilities of synergies for the company: an operational synergy that's not too strong, and the synergy financially. So basically, the operational one we projected, and we see that as not much favorable in terms of revenue. In terms of free cash flow, it's a little bit better because the company has a great cash flow, the Comerc, of 10% of the total of Vibra's free cash flow. And so it's great in terms of cash flow, not in terms of revenue. And the Comerc has a higher cost of debt, around CDI plus 3%, and Vibra has a CDI plus 1%, and the potential to amortize company's debt. And we projected the potential renegotiation that Vibra could help Comerc based on the Comerc's debt profile of 2024 in September. So basically, we consider this the company's debt profile and try to assess which of these debts could be negotiated. And we find out using two criteria for this. So we consider the debts only in the long term, only post 2029, and the debts that are not linked with a special purpose. So, for example, the debentures of Hélio Valgas has a constraint of the project involving that is the special purpose debt. So we consider that the green ones that are negotiable, and the yellow ones that are not due to this special purpose thing.
Something that really caught my attention is the chart that you show the EV/EBITDA, the historical EV/EBITDA, and the company is trading 31% discount to historical average, and it's the lowest point ever.
Yes.
Why should I buy that? If the market is punishing so much the company, why is the market so bearish?
Okay, so thanks for your question. Basically, the company is current at the 31% discount that you mentioned, And for this, we expect that the companies is not being well precified. We projected the ambition increase, and these are mostly motivated by the resolution of the irregularities that are not linked with this market pessimism. Since the recent regulations, like the including of the single-phase taxation for ethanol in the tax reform, and the hardening of penalties to the non-compliance of Renova they were recently approved. This is already working, but the market didn't recognize this well in our vision. And we confirmed that by our reverse calculation that we see the market pricing for 2025, 160 reais per cubic meter margin, and in 2026 is a bit lower, it's 159.
I'd like to complement this one. Fernando said about the irregularities. We see already a better competitive environment for this. So we have in the last months a few laws considering Renova non-compliant environment crime. So we already have more distributors aligned with the sector interests, and this allows Vibras to increase margin and have our upside that we projected.
Can you deep dive a little bit on your CapEx estimates and how you arrive at that? And I also saw some rebranding CapEx. Can you explain a little bit more?
Sure. So the rebranding CapEx is the slide 94, so it will be quite long. But actually, we projected this rebranding considering not the total CapEx that we expect, but actually just 20% of it, because this rebranding could be addressed since the expiration of the trademark contract, which is at 2029, but the Vibra by the contract has time to do this rebranding process until 2035, 2036. So basically, we projected using Brasil Postos data with the costs of this rebranding for pump area, courtyard, and equipment, summing this and multiplying by the BR flag stations that we found out by the ANP license data. And we find out a total rebranding capex of 1.05 billion, and considering just 20% in perpetuity, like in the next in the 2029 expected year.
Okay, and in the other years, what is your forecast for new gas stations? Can you explain a little bit more?
So basically, we didn't forecasted like much new gas stations in our capex. We projected just like it's now in 8,000 gas stations with contracts of supply, and not the just flags. And we projected this increasing just to 8,200. So it's a big increase that we expect in the next years, and it doesn't really increase relevantly the capex projections.
To complement Fernando, this occurs because Vibra strategy focus on margins and EBITDA margins. So this increase this network.
Yeah, on your slide of irregularities, and you have a 16% upside for your base level for EBITDA margins per square cubic meters. Can you walk us through a little bit more how you assess that percentage-wise? And I mean, you put a high percentage for the one that has a lower contribution, but a much lower percentage for the higher contribution. Are you being conservative on those assumptions, and how you came up with those numbers?
Okay, so thanks for your question. So we basically see for tax-related and regular mixing, not so much improvement in the next years. On tax-related, mostly because of the bureaucratic system, we see a little bit improvement because of the government laws that it's being made in the last months, but we don't see it improving so much in the next years. And for irregular mixing, I'm more conservative too, just because of the number of gas stations around Brazil. So we don't see ANP can reach each of these gas stations to check the fuel quality of each one of those. And for Renova we see we are more optimistic about this, just because the last few weeks and few months that we have on Senate a few laws that has been approved that turns non-compliant with